What is good, everyone? So this right here is how I made $3,888 in about like 15 minutes. Yeah, so open up at 9:45, close at 10 a.m. Eastern, right? This is basically how to manage risk logically and leave all emotions behind it. So we trail our stop doing the trade to this high, then to this high, then to this high, and let it run all the way down here, right? This is so valuable, and you can like learn a lot about this because this is basically how to eliminate all emotions, but by zooming down to the lower time frames to trail your stop loss doing a trade to minimize risk. So the trade was taken on based off the 15, 30, and 1 hour time frame, but we used the 1 minute and 5 minute to trail stop to minimize risk and to trail it logically. Okay, so this is very valuable. Trust me, you won't regret watching this video. But anyways, here's the proof: 3.8k, top left corner, live account as always. And let's get into trading view. Let me explain why this trade was taken and how we managed it. All right, so here we are on TradingView now. The first thing I always do whenever I show up to the market is identifying the overall trend. Okay, so now I'm just going to ask you, does this look bearish or bullish? Okay, just based off market structure and price action, let alone right here. Does this look bearish or bullish? Looks bearish. Okay, so hence why I'm taking sells as well. It's way more easy to take pro trend trades than counter trend trades, because based off probabilities, if a candle closes bearish, there's a 75 to 80% chance that the next candle will end up closing bearish as well. Okay, so with that information, the probabilities are with you if you take sells. Okay, now this is just an overall bearish bias. You also have to know how to enter on the lower time frames, and how to manage risk accordingly, how to trade your stop loss. We'll get into that as well. But anyways, the overall trend is bearish. Just looking at the 1 hour, I mean, I could go on the daily as well. Two previous candles closed, pretty strong bearish. 4 hour also closed bearish up here. Like, this is bearish. Order flow, market structure, and price action is bearish here. Now, let's zoom down to the 5 minute. This is actually a pretty unusual trade, because I mean, this is pre-market open right here, and we already grabbed buy side liquidity up here pre-market open, and it typically happens at market open. But today, or on Friday, which this trade was taken at, it happened pre-market open, 15 minutes before. So I was like, okay, well, if we're grabbing buy side pre-market open, price is most likely either, there's two scenarios up here. It's either gonna push up and liquidate the pre-market liquidity grab and then starts flipping bearish. So price is going to end up looking something like this, and we can take advantage of that move, right? With a double liquidity grab, liquidating this buy side also, right? That was either option 2, or we'll get some kind of smaller liquidity grabs within the bigger liquidity grab, which we ended up getting, right? Now let's go back a few bars here, and let's see what happened, right? So let's delete this as well. Now keep in mind, if you go to the 1 hour, this is a textbook ass play. Look, if you're not familiar with the playbook, it's basically just a candle closure, bearish in this case. Next bearish, pushes up, breaks its previous high, starts flipping bearish, right? That's basically the entire plan, which also happened here. And if you play the next candle, we shot all the way down here, right? I didn't catch this entire move, but shit, that was crazy. But anyways, no FOMO, obviously. Now, this is the playbook move right here, A+, right? Now, instead of getting an entries down here, stop loss up here, and TP all the way down here, we would have, it's more ideal to go to the lower time frames and anticipate the entire move. And what do I mean by that? So we went to the 15 minute right here. Let's actually go back a few bars. Pre-market open, and this right here is the new market open, new 15 minute at market open, some from 9:30 to 9:45. Let's actually go down to the 5 minute, and the market opens right now as we speak, right there, right? That's market open right there, right? So now with this information, I was like, okay, well, we're most likely not going to get this move up here to liquidate the pre-market open liquidity grab and then start flipping bearish. That would also be ideal, and I would take advantage of that move to continue down. But that didn't happen. So I was like, okay, well, let's see how we can adapt to this price action and be reactive instead of trying to predict what's going to happen, right? Now, price pushed down at market open about 70 pips, which is honestly pretty good. So there's a lot of volume here. Now, next 5 minutes pushed up again. And then the next 5 minute, which is very key, pushed up, broke these highs, previous 5 minute highs, with a liquidity grab, and broke this 5 minute high as well. And now we're anticipating that move to continue down. This was my entry criteria. This was my entry, like what's it called? Like entry confirmation right here. So I entered right there. Stop loss was up here, right above the, above the 5 minute liquidity grab. But do you see how we're using the lower time frames to our advantage here, because this is a liquidity grab on the 1 hour and 30 minute right here, liquidating this buy side liquidity. Now, this is another liquidity grab above this buy side liquidity right here on the 5 minute and 15 minute. And now I'm anticipating that this move will continue all the way down here to previous 4-hour lows, which is my draw on liquidity, right? Now, let's go down to the 1 hour. Let's actually delete these arrows right here. The 1 hour is obviously textbook here, but at this time, whenever I entered, price was bullish still, okay? Look at, try and imagine this right here. Price was like this. And I'm anticipating that the 1 hour will end up flipping bearish, so something like this, which obviously ended up happening, and then will continue down for the rest of the day. That's basically what my bias was. But I used the 15 minute and the 5 minute to identify another liquidity grab within the liquidity grab, if that makes sense. It will all make sense. Just keep watching here, okay? So there's a 1 hour and 30 minute liquidity grab up here. Now there's a new 15 and 5 minute liquidity grab right here. And my stops are up here placed logically, because if these were to break, we would most likely continue up for the entire day, which, price action would most likely do something like this, and will just continue bullish for the entire day, basically. So, stops are placed logically, because if these were to break, we'll probably continue up. Hence why I'm placing my stops there and targeting these lows right here, previous 4-hour lows. But anyways, let's actually play another candle right here. So next 5 minute pushes up in drawdown, can't avoid drawdown. I have no idea if there's going to be drawdown or not whenever I enter a trade, but as long as our stops hasn't been hit, the trade is still valid, because our stops are placed at logical levels, right? Now let's play the next 5 minute. Next 5 minute, look, pushes up and breaks its previous 5 minute highs right here, and then starts flipping bearish. So there's now 3 liquidity grabs within 1 hour candle, within 1 hour, like one hour candle, okay? So there's a liquidity grab here, liquidity grab down here, and up here breaking previous 5 minute highs. So now I'm gonna trail these stops to this high, and then once this current 5 minute candle breaks its previous lows down here, I'm gonna trail these stops to this high, okay? Because I'm constantly trailing my stops to minimize risk, okay? Because if this were to break and if this were to flip bullish again, the position wouldn't be valid anymore. It would probably most likely based off, experience, based off logical market structure and liquidity. If we break these highs, we'll most likely continue all the way up here. Hence why I'm cutting the loss early. So we are cutting the loss about 50% here if it were to turn out a loss, right? So now, original stops was up here, about 72 pips, and the trail stops was down to this high. Then after, this candle right here closed, broke these lows, we'll trade it to this high, which is about 40. So we minimized it by around 50% at this point. And then once this 5, broke these lows, I would go break even, which had happened on the next candle, like right there. News happened, went break even, and news was so volatile. There was a gap, like super crazy. I wasn't anticipating news to be that crazy at 10 a.m. But it was. So I thought, why not just close it here and let's, be out, at news, basically, right? Because news just spiked down, spiked up, spiked down. I was like, okay, I'm not gonna be part of this. Let me just close in profit. Beautiful profit, closed down here. Original target was down here, which ended up being, tapped, but whatever. No FOMO. It made sense to go, break even at this point. Made sense to trailer stops from these highs to these highs to these highs, and then go break even, then take profit right there. That's basically how to do it. Everything about this trade, which was logical. I didn't get emotional because price was in drawdown. I kept trailing my stop loss to each, and basically the new high, right? So from these highs, I said, to this high, based off market structure and liquidity grabs within a bigger liquidity grab. Now, you may ask, and you may be concerned or whatever about this being a negative or, because I entered around here and I closed down here on the top of this the bottom of this 5 minute, and I caught about like 58, about 60 pips in total, right? But my stops were like 70, right? My stops was around like 70. So it's a negative or trade. Yes, it is. And I trade negative or trades. I don't care. I take what the market gives me. If the market is going to give me a negative or trade, I'm going to take it. If the market is going to give me a 1-to-1 trade, I'm going to take it. If the market is going to give me a 1-to-2, I'm going to take it. On average, it's probably honestly negative. I probably win like 1 to 0.8 of my winning, if that makes sense. My average or is probably 0.8. Now let's do the math here, because everyone ever since ICT came on, like a few years ago, everything, like ever since he started popping off, everyone has been against RRs, like negative RRs or like one-to-ones, whatever. But it's completely stupid, and let me explain why. So my average, win rate is about 82 to 83%. Now let's just round down here to your advantage, to the negative RR traders here. Let's just use round numbers, and let's say it's an 80% win rate. Okay, 80% win rate is right there, right? Now, my average loss is not -1 R. It's not. My average loss is about 0.75, okay? Because I constantly manage and constantly trail my stop, you know, basically whenever the trade is going on, because I do it logically. So I never lose. I very rarely lose 1 R. I lose about 0.75 R on average, right? Now, with this information, I also win about, let's just say, 0.8 or on average per trade. But let's just round it down again to the ICT haters that don't see the benefit of trading negative RR or one-to-ones. Well, let's say my average RR on a winning trade is about 0.75 as well. It's probably like closer to one-to-one or like 1 R, but whatever. Let's just say 0.75 to the advantage as well. Now, RR right here. So my average losing trade is minus 0.75, or my average winning is also 0.70 RR. Now, what does this mean? That means my average RR is 1-to-1, right? 1-to-1 RR right here. Now, because I know how to manage my risk if it's in a losing trade, and I know how to close logically as well, take profit logically. So my average RR is not 0 point or like negative. It's more like 1-to-1, because I know how to manage my risk in a losing trade and cut my losses early, right? Now, with this information, 1-to-1 RR with an 80% win rate is super, super profitable. It really is, because you can think about it. You can be profitable with a 1-to-1 with a 51% win rate. Is that very profitable? No, it's still an edge because you got that 1%. But this is an 80% win rate round down, right? This is, remember, it's more like 82 or 83, but this is, let's just say 80, and this is also higher. My average win is also higher than this, but I just rounded down again, right? My average losing trade is probably like 0.7, not 0.75. So I constantly round down as well to your advantage right here. But this is super profitable, and this is why risk to reward doesn't matter. Now, it doesn't matter if you know how to use it and how to manage it, and if you have a good win rate as well. And that's what I have. I've used this strategy for like 2 to 3 years at this point, and I know how to manage it very good. Okay, not to sound ignorant, but I really do. Okay, so this RR debate on negative RR is so bad or one-to-ones are so bad. No, it's not. If you can have a good win rate and you know how to manage it and how to utilize and take advantage of it, it's good. It's profitable. It is very profitable. It is a 1-to-1 with an 80% win rate. That's very profitable. Most profitable traders have an average with a 1-to-1 or about 60 or 70% win rate. This is about an 80% win rate. This is super profitable right here. But obviously, everything needs to be done logically. Everything needs to be, you need to move your stops logically below or above liquidity grabs. Within liquidity grab, need to constantly trail it to cut your losses early, to do it logically, because if these were to break, we'll probably continue up. You get the idea, right? That's basically how to do it. So I don't care if I risk $1,000 just to round numbers down, $1,000, and I win $800. I don't care. Sometimes I'm gonna risk $1,000 to win $2,000. Sometimes I'm gonna risk $1,000 and I'm gonna win like $500 or like $700 or like $900. On average, it's about a 1-to-1. If you take an average loss, 0.75, average win 0.75. It's a 1-to-1, 1-to-1, 80% win rate. You get the idea. Now, I know that's pretty advanced, and this trade was pretty advanced, but just keep that in mind that there's layers to this strategy, and everything is numbers basically. Every single thing in trading is numbers, and if you know how to manage that, if you know how to utilize that and take advantage of it, it is basically game over for you. You can become profitable pretty fast. But that's basically this, the trade right there. Could I have held this trade to these lows? Yes, obviously. But if there was no news, I probably would have done that as well. But news was happening. Price, spiked down, spiked up, spiked down. I was like, fuck this. I'm just gonna get out, take my profits, and move on with my day, right? But that's basically the trade. I hope you found that valuable. I know it's a long run, but that's basically the risk to reward debate right there, summed up. But anyways, a 1-to-1 RR or a negative can be very profitable if you know how to manage it, okay? So yeah, that's basically the video. That's basically the trade that made me almost $4,000 in about 15 minutes. And if you like more of these trade recaps, let me know and I'll do more of them. So if you found it helpful, informational, or whatever you want to call it, just leave a like, comment, subscribe, and I'll see you guys in the next video. Take care.